Sometimes you end up paying, like 40, 50 rupees a kilometer for a ride, which was meant to be 18 or 20 rupees a kilometer. BluSmart will use 100% renewable energy from a dedicated solar power plant, which will provide energy to BluSmart charging stations via the central grid of India. The learning has been that good to have a co-founder, good to, then you can build a solid company and you can share. Being a solo founder, I think is pretty challenging. Here in Geo Mall, here in BKC, imagine a massive charging infra facility coming up there. So when people shop, they can also charge their car.
Hello and welcome to another edition of My Way. The guest on my show today is Punit Goyal, founder of BluSmart. As we all know, BluSmart is India's largest electric vehicle ride-hailing service. BluSmart has raised almost $150 million from venture capitalists and now is on their way to growing their business in a market that is growing as well. Punit, thanks a lot for joining us on the show.
Thank you, Sonia, for calling me. Thank you.
It is, a wonderful journey. I think BluSmart started in 2019 and now you guys are growing disproportionately to the market, I would say, considering the kind of niche market that you have. 5,000 EVs at the moment on ground, but not in Bombay yet.
Absolutely. So we started our journey back in 2018. It was an idea at that time. I had just come back from the US and I came up with this idea of starting a born electric integrated full stack EV ride hailing service and EV charging network. And I pitched my idea to my co-founder Anmol Jaggi. He loved this idea and he said that, is anybody doing it globally? I said, no, there's no such company, but that's the future. I'm telling you, that's the future. I was really, really convinced. I had met a mentor who was Brent Kalinikas. He was CFO of Uber. I met him back in 2017 and he had told me that the future is electric, but the future will be electric only if you can build an energy infra mobility company intertwined together. And I probably put in 2 years of research, all of 17, all of 18, a lot of travels to the US, met every single charging company in the world, every single EV manufacturer in the world. And I kind of understood that to truly scale the EV ride hailing service, the missing box was the charging infrastructure. And nobody's investing in charging infra. And why somebody's not building large charging infra is that they didn't see the utilization happening because there were no EVs on the road. So this was a classic chicken and egg problem. And I thought if we could build an energy infra mobility company in alphabetical order, and that's where our experience comes from. Anmol Jaggi and myself, we have spent 10, 12 years building solar power plants in India. So we knew that this is an energy infra business and we just wanted to add mobility to it. And that would complete the entire business of electric ride hailing and EV charging. We started off with 10 cars and 2 charging stations in Jan 2019. Today, BluSmart operates nearly 6,000 cars in Delhi NCR and in Bangalore. Delhi NCR is the largest market of India. 24% of India's mobility and transportation market is Delhi NCR. It's also the largest airport of India. Indira Gandhi International Airport serves nearly about 20-25% of India's passengers who fly. And that was the right market to start. And we also launched in Bangalore. Now we have in Bangalore about 600 cars. So between Bangalore and Delhi, we have about 6,000 cars.
And why are you guys not in Bombay yet?
Absolutely. Very good question. So we have done all the homework and research and we have, connected all the dots. Now we are all ready. I think hopefully next year, Q3 calendar year 2024 should be the right time for us to go, full on in Mumbai. It's my city. I live here. I'm from Mumbai and born and brought up here. So I'm very excited to also launch in Mumbai. That'll be a third city that BluSmart will launch in India.
Okay. You have a big scalability plan as well. 5,000 EVs currently. You said you plan to get to 10,000 by the end of the fiscal. Where are the funds coming in from?
Well, yeah, so the funds are obviously a very challenging thing to raise all the time. And when we started off, nobody believed in this idea that we can actually do this. While they knew our track record and background of our past businesses, but they were still not convinced about that somebody can take the behemoths on, which are our friends, Ola and Uber. We are extremely grateful and thankful to our angel investors who initially backed us on our face and on a simple presentation we made to them. And over the years, we've got some very, very good institutional investors from the US and from the UK. One of them is BP Ventures, British Petroleum Ventures. Again, they are trying to ride the energy transition wave. They understand that the future is electric. It's imminent that all cars in the future will be electrified. a lot of fleet electrification initiatives are taking place in the UK as well. So we could raise a bunch of capital from institutions like Green Frontier Capital, like PP Ventures, a large sovereign climate wealth fund whose name I can't take right now, it's just under closure. And we've raised a decent amount of capital. We've raised about $146 million till now in venture capital, raising another $50 million now over the next 1 month's time. We've also raised money from DFIs. So a lot of large development financial institutions are backing us, from the likes of Power Finance Corporation, Indian Renewable Energy Development Agency, and these are institutions or DFIs who believe that India is now poised to grow towards clean energy and clean mobility. So in our earlier projects also, we had got a lot of support from them. They had funded our solar projects, and now they're backing us for our EV story or EV journey. So we have raised about $180 million from large DFIs like PFC or IREDA, who are giving us money for buying chargers, buying electric cars that we bring on our platform.
Okay, I'm going to talk about the whole, clean energy renewable story in a bit. But before that, as you said, it's a tough thing to sort of take on these behemoths in the industry like Uber, Ola, etc. But let's talk about the business models, right? Because it's very interesting. I mean, if you look at the Ubers of the world, they have a very asset-light model where they don't really own the cars, they hire the drivers. But your model is exactly the opposite, where you own the cars and the drivers are on your payrolls. So what is better profitability-wise, and what is better in terms of scalability?
Absolutely. I fundamentally believe that you can never make money or profits if you don't own any part of your business. And asset-light approach really works well in countries where the asset ownership is really high. So in the US, the asset ownership is about 750 cars per 1,000 people. In the UK, it's about 650 cars per 1,000 people. And if you look at our neighbor China, it's got about 275 cars per 1,000 people. India is the world's largest 2- and 3-wheeler market. So Indians probably use cycle, bicycle, tricycle, or 2-wheelers or 3-wheelers, right? India is the largest manufacturer of 2-wheelers and 3-wheelers and the largest consumer of 2-wheelers and 3-wheelers. And when I was doing my research fundamentally in 2016, 17 and 18, I understood that India is not a large consumer of 4-wheelers. It's only about 40 cars per 1,000 people. So we knew that if at all Uber and Ola had to go electric, they'll be depending on individual people to buy cars, and these are drivers, right? So they have two big challenges. Drivers don't have good credit scores and they can't get financing at a lower rate, right? And financing is very difficult for them to come by, and they also can't figure out where the charging infra will come from. So we knew that this EV story or this ride-hailing story with electrification will never happen. The EV manifestos or the EV mandates of Uber in India and Ola will not be really successful, or they won't be able to achieve it because of the business model. So we wanted to tweak the business model. And we thought that let's apply, I'm an economics student, so I thought if we apply Pareto's principle, instead of going to 50,000 drivers to bring 50,000 cars, we'll go to 5 or 10 institutions and bring cars on the table. It's much easier to go to 5 or 6 large development financial institutions and secure assets than go to 50,000 people to secure assets. So we did that. We changed the entire supply side and institutionalized the supply side from individual ownership to now large institutions chipping in and deploying 15,000 cars, 10,000 cars. So that was much easier to do. Second challenge we understood was in this electrification journey will be charging infra. And we knew that we had the background of energy and infra, but these companies were only app companies, right? Match.com of mobility or Airbnb of mobility. And I knew from day one that you cannot create an Airbnb of electric mobility. What will you aggregate which doesn't exist? So there are no EVs on the road, then there's no charging in front of the road. It'll be very difficult to build an Uber of charging or an Uber of electric mobility because assets don't exist. So we thought we'll have to create it from ground up, right? India is a $3.7 trillion economy right now. And as per McKinsey, India will be an $11 trillion economy. That won't happen on SaaS. It'll happen with infra investments. You'll need to invest in airports, power plants, roads. You need to make more cars, more charging infra. So you'll have to do a lot of infra investment. So we knew from day one that this is an infra game. So let's get the cars, let's do the capex, let's build the charging infra, let's do the capex, build everything from ground up, build essentially an energy, infrastructure and mobility company, all intertwined, interconnected. And that's a huge moat, because then what you're building is a breadth of charging. So when I pitched my idea to my co-founder, I remember I just come back from the UK in 2018, I told him that, look, Starbucks has a massive advantage in New York because you see Starbucks everywhere at prime locations. So you walk in there not to buy a croissant or muffin, but to buy a bottle of water, because you see Starbucks everywhere. You apply the same logic to London, you see Pret everywhere. So I walk into a Pret to probably get a bottle of water, not to buy any food from there. If we apply the same logic and build EV charging super hubs, BluSmart today operates 1.5 million square feet of EV charging infra across Delhi NCR and Bangalore, across 36 EV charging super hubs. Each hub ranges from about 50-60,000 square feet on the smaller side to about 160,000 square feet, like in a shopping mall. So in Vasant Square shopping mall, which is in the heart of Vasant Kunj in Delhi, we have -2, -3, two basements in the mall, where BluSmart has parking for 400 cars, charging for 400 cars, spread across 160,000 square feet with 2 megawatt power load. So we get energy connection, we get the prime real estate, we get demand with a capital D with BluSmart cars, and we utilize the entire hub. So we have industry-leading utilization of the charging infra. And the whole idea is to replicate the Pret of charging. So build EV charging hubs at prime locations in the city. Every city has two challenges. They have finite prime locations and there's finite power load. So you need to create that infrastructure. You need to tap the best real estate, bring the energy connection, then bring the electric cars to utilize all the infra that you've created, and that creates a virtuous cycle. So build hubs, bring cars, utilize them, create the virtuous cycle. I call it the BluSmart virtuous cycle. And that really spins the growth success story. And that's how we started one hub. We have today built 36 hubs. We started with 10 cars. Today we have nearly 6,000 cars. And for a company like Uber and Ola, it's very difficult to do because they were never designed like that. So BluSmart is a born electric company. A lot of people are transitioning to electric. So when you transition, it takes a lot of time. It could take about 20, 30 years, 40 years for transition to happen, which eventually will happen. And I'm sure that it should happen. It should not be a monopoly. There should be other players who should be doing what we're doing.
There's Uber Green now as well.
Yes,
that's
absolutely.
Coming,
and they're trying their level best to add some EVs. They today, I think, operate about 500 EVs. In fact, we started on their platform. So BluSmart was launched on the Uber platform. I remember the first 20-30 cars we had. We met with the Uber team and we said that, look, our app is not ready. You have your app which is running. Can we deploy some of the cars on your platform? So BluSmart started off on the Uber platform. We scaled from 10 cars to 300 cars on the Uber platform. We operated for 9 months on the Uber Delhi NCR platform. We did thousands of trips for Uber customers. And everybody was so pleasantly surprised that they booked an Uber and a branded BluSmart car is coming. It's like you're buying an Air India ticket and a Vistara plane comes and picks you up. And you see that your experience is elevated. It's such superior experience. And we told them, look, our app is coming. Don't worry, wait for some time. It was 5th December 2019. We said Tata bye-bye to Uber. We launched our own app. Since then, we haven't looked back. We have covered about 310 million kilometers. We have done about nearly 9.5 million trips, shortly touching 10 million trips. All this with an app store rating of 4.9 out of 5.
Wow.
Customers love us. Women love us. I think when I post on LinkedIn, we were LinkedIn Startup of the Year 2023 ranked 2nd. Previous year in 22 ranked 10th. Previous year 2021 ranked 16th. And every time I post on LinkedIn, I see few hundred comments and 80% of them are women. And they say, what a safe, accountable, cleaner, reliable, affordable ride-hailing service you guys are building. It's so good for us to travel. I can pick up my child from school in your car. I can go to drop my child, in your car. It's a branded service.
So what is the incentive for someone who has been traveling with Uber, Ola all their life suddenly to switch to a BluSmart?
Yeah. So, when we were starting up, we knew that the moat could not have been scale. We can't beat them on scale. Neither that's the idea. The idea was very simple. We wanted to beat them on quality. And quality was absolutely missing. When you take an Uber in the UK or you take an Uber in New York or in San Francisco or San Jose, the experience is amazing. But when you take an Uber in India, you get a white color car, which is could be a Swift Desire or Ritz car, and the driver has not kept it clean. The driver is trying to fend for himself. He's not had the chance to earn well. He's not had a chance to bathe. How can he keep the car clean? So when I spoke to consumers back in 2018-19, they told me, Punit, I have two problems. There's a lot of ride denials which are happening. If you take a ride, if I can give an example of Mumbai, if I'm in the BKC area and I want to go to Naiman Point, the driver will say, you know what, Mr. Goyal, I would like to go back to Dahisar or Kandivali or Borivali because I live there and I don't want to travel to your direction you want to travel. So I'll deny the ride on you. And this just,
puts off the
customer. Second challenge that we got to know from the consumer was surge pricing. Since it's an app platform, the job of Uber is to show drivers where the demand is and show customers where the car is, right? And this matchmaking is what Uber does, and for that it charges a commission. But for doing that, it does heat mapping, it knows where the demand is, so a lot of surge happens. If they see the car is not there, they increase the price in that region so that more and more drivers can come to that area. But that is wrong. The pricing goes over the roof. Sometimes you end up paying, like 40-50 rupees a kilometer for a ride which was meant to be 18 or 20 rupees a kilometer. So we thought if we launched 2 industry first features of zero ride denials and zero surge pricing, that will be absolutely game changing, right? Nobody has done that globally. So we launched with this idea that just like how
So BluSmart has zero ride denials.
Yeah, we have
is
zero
it?
ride denials.
Wow.
We have zero surge pricing. And the learnings were again from global transportation platforms. So BST bus in Bombay, Delhi Metro, or Tube in London, or Subway in New York, none of them do ride denials. All of them are public transportation platforms and reliable ones. But they don't do ride denials and they don't do surge pricing. Regardless of the time you travel during the day, the pricing of those platforms are the same, right? So if the match is happening at Wankhede or whatever is happening, the pricing of BST bus doesn't change, right? It's the same match is happening in Delhi. Delhi Metro keeps the same pricing. So we thought to apply the same logic to cab market. Okay. Customers just loved us. And the branding of BluSmart on the car, the accountability, that's a BluSmart branded car, right? So they're accountable for the service. It's not that we are washing our hands off of the service. So we wanted to create that safe, clean, affordable, clean cars, happy drivers. Happy drivers translates to happy customers. The driver has no stress. Since we own all our assets, we knew that the driver's core skill set is to drive. A driver is not a JP Morgan or a Credit Suisse or a Macquarie or Fairfax. Driver's core skill set is to drive and not bring an asset on the table. That's an additional thing that the driver was doing. So we simply decoupled the driver from asset ownership, and we told the driver, stick to your core skill set, what you're good at. You're good at driving, do that. We'll bring the asset on the table.
So you filled all the gaps basically that Uber and Olas of the world had.
Yeah. So we learned from them. I think they're an amazing service. Globally, I vouch and use Uber. It's an amazing service. It was born in the US to solve their challenges. In the US, it's a $2 trillion automobile market. India's GDP is $3.6 trillion. I don't know, you can correct me. But the GDP of India is $3.6 trillion. The automobile market in the US is $2 trillion. So they wanted to monetize assets which are on the road. And that's how Uber and Lyft were born. But you can't replicate that in a country where the asset ownership is only 40 cars per 1,000 people, right? So you can't create an Airbnb of electric mobility or Airbnb of mobility also. Somehow, I think, and another very important...
In terms of pricing, what is cheaper?
So we never started our service to be cheap. The whole idea was to be like Indigo Airlines or like Vistara. Give quality to the consumer.
Premium?
And charge customer a premium for it, and customer is willing to pay for it. But we happen to be cheaper at occasions because our friends surge, and because the surge goes over the roof, we can't match the surge because our pricing is consistent. We do price revisions maybe in 6 months or once a year, but once we do it, it's on the app. Very, very transparently. So the consumer, you can go on the BluSmart app and you can see in Delhi, this is our pricing per slab, 0 to 5, 5 to 10, 15 to 20, 20, 25. All the slabs are mentioned. And the pricing remains there for 6 months, 9 months till we revise our price. But there's no price variation during the day. So the price is consistent. We should be, I think, 5 or 8% premium in terms of pricing to our friends on a normal day. But if you see your average last 20 bills of BluSmart or the competition, you see that we have been about 10-15% cheaper because we don't surge during peak period.
I love how you're saying friends and not peers or
friends
competitors.
Because we are doing the same thing. Our singular goal and focus for everyone is to deliver a good consumer experience. Somebody can do better than somebody else, right? So, but we all have the same mission, to provide consumers a good experience while they travel or commute within the city.
At the end of the day, a startup is also about eventually turning profitable, right? Yeah. So at what point, where are we on that timeline?
We chose EVs to be profitable, and we knew that you can never make money in India if you run your cars on CNG or petrol or diesel. So when I wrote the white paper of BluSmart back in 2018, I was fondly telling my co-founder that the cost of CNG at that time was about 37 rupees a kg. The cost of CNG today is nearly about 80-85 rupees a kg. It had gone to 95 rupees a kg. The cost of CNG went up 2.5 times. The cost of petrol at that time, when I was thinking of BluSmart as an idea, and my co-founder, along with my co-founder Anmol, was about 72 rupees a litre. Today, the cost of petrol has gone to be about 150 rupees a litre. And I was studying that the cost of petrol, or they call it gas in the US, is $1.16, $1.20 per gallon. The cost of gas in India is is more expensive than the cost of gas in New York. It costs about $1.25 for the petrol. How can you ever make money if the cost of fuel is more than the cost of fuel in the US? It's impossible. So you have to change the form of fuel. And electric vehicles allow you to do that. The cost of running an EV, I use an EV here individually also, and we have thousands of cars of BluSmart, is just 1 rupee per kilometer. Less than 2 cents per kilometer. So the operating cost, along with the capital cost, if I convert the capital cost plus the operating cost, the total cost of ownership is much better compared to ICE vehicles, which are petrol, diesel, or gas vehicles. Now, how does BluSmart make money? So we charge a consumers, the tariff for traveling. We are doing today nearly about 7.5 trips, and as we continue to grow, we are now reaching profitability. So I think once we cross 8.2 trips, we should be profitable. We are just less than a trip away to turn profitable. And that has been a journey which has been an amazing journey of 4 years. We weathered the pandemic. We were totally shut down. There was no need of mobility.
When you say 8.2 trips, no, I didn't understand.
Each trip, the average order value of each trip is around 450 rupees to 400 rupees.
Okay.
We're doing nearly about 7.5 trips.
Okay.
And with our expenses, we need to do 8.5 trips to break even.
Okay.
And the cars can do about 12 to 13 trips per day, given a 12-hour day. Because in India, you can do 1.1 trip per hour. So in 12 hours, you can do nearly about 13, 14 trips.
Okay.
And as our geography is expanding, we are increasing the number of trips. For example, I'll give you a laymanish example. So we have finite pickup points and infinite drop-off points in Delhi NCR. Right now, we can drop you in Noida or Greater Noida, but there's no pickup from there. So if the car goes there, it comes empty.
So
once I open more charging hubs there and I allow consumers to come, immediately I'll get 1 trip from there. And there's certain more geographies in Delhi NCR. So the entire theory or thesis is to go deep and wide in a city. And as you deploy more cars, so I think with nearly 9 or 10,000 cars, we'll be much above that zone and we'll be absolutely in black. So next year is the year to be in black and start
and
making
once
money
you're in black,
NCR.
then do you have plans to do an IPO?
Yes. So my co-founder Mole, probably he's an IPO specialist. Since he listed his company, he founded Gensol, which is listed on the National Stock Exchange. I'm learning from him how to do IPOs, and still early days, but probably the way we're expanding and the way our consumer love is growing, we may have a lot of retail participation, is what Anmol says, that consumers love us, let's tap into them, but maybe 3 years away. Right now, we are raising substantial amount of private capitals and climate fund capital. So we are set for the next 2 or 3 years, but yeah.
And you've been in this renewable energy space for very long, right? Before BluSmart as well, you had PLG. Tell us a little bit about your sustainability journey and what do you see as the future?
Yeah, so right out of college, when I was studying in the UK, I wrote a dissertation on renewable energy. And while writing my dissertation, I figured out that it's a great industry to be in. So I spent all of 2007 in Europe and in the US researching about what the solar market is, why Europe is buying so many solar panels, why these why these countries are now going renewable, what is the government focus. And I learned that at that time, the market was pretty big in Europe, in Germany, Czech Republic, Spain. They were building these massive solar power plants. So when I came back to India, I decided that I'll start with a solar panel manufacturing facility. Very bold call at the age of 24. I didn't have a co-founder at that time, so a lot of learnings also along the way. I learned the 4 years were great and also very tough for me. In 4 years, we achieved decent success. We had manufactured and exported about 72 megawatt panels to Europe. We achieved revenues of close to $110 million. It was all going great until the market just plummeted and crashed in 2013-12 in Europe. Europe pulled the plug on their feed-in tariffs. They used to call it feed-in tariffs, and decided to not pursue the renewable energy ambitions, because at that time, some of the countries in Europe were not doing well, with Greece and some challenges in Spain. And I had set up this massive factory with the whole idea. It was an export-oriented unit. So the whole idea was to make panels here and export only. I was not ready for the Indian market that time. And that was a big learning for me. And I had to shut shop. My first venture, immediately call it off. And then I had a pretty challenging time in 2012, 2013. I got really stressed out, didn't have a co-founder. In fact, my learning over the last few years have been, it's good to have a co-founder to share your pains with. I put on a lot of weight at that time. I got thyroid but somehow managed it and with support of my wife, and then bounced back and started my second company, which set up a 20 megawatt solar power plant in Gujarat. India opened its doors for setting up energy plants, renewable energy plants, and I then set up my second company, PLG2. It's called PLG Photovoltaic, and we set up a 20 megawatt solar power plant in Gujarat, in Patan. PLG, the initial of my grandfather, Shri Purushottam Lal Goyal. He had passed away in 2007, so I thought I should probably start all my companies with his initials to probably give him respect. And the second project turned out well. We set up that 20 megawatt project in Gujarat. We invested about $62 million at that time for building that project, and we sold off. I sold off that project after 2 years of running it to Zamil Group for $68 million. That was my second PLG journey, and my third was a PLG Clean Energy Projects, was my third company, where I set up a 70 megawatt solar power plant in Dhule in Maharashtra.
So you have a lot of experience in starting businesses.
Well, it just happened. It was not planned that way, but opportunities came along the way, so I kept on starting another venture. But it was my second company, PLG Photovoltaic, when I met Anmol, my co-founder now at BluSmart. His company, Gensol, had built that 20 megawatt solar asset for me. So I met him back in 2012, and I had no idea that 7 years down the line, we'll be starting a company together in 2019.
So what do you think the future of the EV industry in India is? I'm asking because as of now, a lot of the EVs are powered through coal-based power plants, and that is, of course, as we know, not the future. Future is to move to sustainability and to maybe thermal-based, renewable energy, etc. But how long do you think that transition would take?
I think the transition can happen immediately. We don't need to wait for so long. I can speak for BluSmart, and I can speak for the industry overall. So India now has one grid, one nation policy. Which means that you can feed the power from anywhere and feed it to the central grid, and you can draw the power from anywhere, right? So India now today accounts for nearly 63-64% of all the power that's generated in India. The installed capacity is today thermal power, coal-based, and 37% or 36% of all the power generated in India, installed capacity, is non-coal-based. So that's where we are. So even the energy that we use from the grid today is at least 37% non-coal-based, which is a good step to start with. And that's what we have been doing along the last 3-4 years, using energy from the central grid, where energy today's source is 63% coal-powered and 37% is non-coal powered. Renewable is a part of it, so renewable contribution could be about 25-26% of the overall energy mix.
So the target is to reduce that 60% of coal power and move more towards non-coal-based power
so
plants.
India's target is by 2032. Ministry of Power guidelines is that, and it's on the website also, that by 2032, all the new power plants which are coming up now, none of them are coal-based power plants. All are renewable and solar power plants. India in the last 10 years has added nearly 100 gigawatts of wind and solar plants, which is an amazing feat. No country in the world is going the way India is going. But BluSmart doesn't need to wait for that. So our goal from day one, and Anmol and I, we are serial entrepreneurs in the energy space, was to decarbonize mobility from day one. The goal was to use renewable energy. I think now the time has come. BluSmart today operates nearly 150 megawatt of batteries in cars, which is a massive amount of 150 megawatt of batteries is in all BluSmart cars. Now the time has come to use renewable energy. So next year, early next year, you will see BluSmart making a large announcement, could be Jan, could be Feb, where BluSmart will use 100% renewable energy from a dedicated solar power plant, which will provide energy to BluSmart charging stations via the central grid of India, because of the laws of India allow that, to the main grid under open access policy. The entire fleet of BluSmart, 10,000 cars, will be 100% run by renewable energy, by solar. BluSmart will become the world's first and largest EV ride-hailing service to be 100% powered by renewable energy. That's one of a kind. Nobody's ever thought of it at that scale, and nobody's ever done that. So, and that's when we'll be truly decarbonizing mobility, because right from energy consumption, generation to consumption is 100% renewable.
But as you said, right, in the industry, in the EV industry, 60% of the power is still thermal power. It's still coal-generated power. Which of course is not the goal. How long do you think it will take for the entire industry to move from thermal to renewable?
I think India as a country has massive challenges. We are too big a country and vast country. I don't know of any country of India's scale and size globally which has been 100% running on renewable energy. There are some small Nordic countries and countries in Europe which largely have a mix where renewable energy has taken a lead, with 70-80% still being, but 20% still is non-renewable energy based power. India as a country will take at least about 30, 40, 50 years more for it to actually remove coal as a backup plan, because India's last growth, whatever has happened, has been the last 30 years, and we are not ready right now to completely shove coal out. But it's awesome to see that coal has come down from 95% when I was, I think in Standard 4, if I'm right, in 94. India's dependence on coal sector was about 95% of India's energy mix, and it's so proud to see the government playing an amazing part, and the last few governments also doing their bit, that in the last 30 odd years, India has leapfrogged from 5% non-coal energy mix to now 35%. You also have to take into account that India's energy requirements are going up. Yeah. Today, India's installed capacity pulled in is about 450 gigawatts, and India's total pulled in installed capacity is expected to go up to 900 gigawatts by end of this decade. That's what the plan of Ministry of Power is. So 550 gigawatts of new power will come to India, and that will be largely a mix of 60-40, where 60% will be, 70% will be solar, and 30-40% will be coal based. And if you see the overall number, by end of 2032 will be all the power combined, which is 400 megawatt installed and the new plants coming in. 50 will be coal based and 50 will be renewable based. So that's how it will pan out. But that's a great achievement of India's scale and size. And India's population is also the largest in the world. So yeah.
Absolutely. So, I mean, of course, you have a long journey ahead. But coming back to the industry, right? Globally, ride-hailing companies have had a tough time with profitability, largely because of perhaps scalability issues. We were talking about this, how aging of the vehicles that they own, then service becomes an issue, and then eventually it affects the end consumer. But in your case, things are different because, as you said, you own the vehicle yourself. So you can focus more on service, on quality. Is that going to be the strategy over the next 10 years as well? Or at some point, do you think you may have to move to the other model?
No, absolutely. We'll stick to our model. Our model is COVID-proof, and and we know our model is absolutely built on right fundamentals. Ride-hailing is profitable, but you have to choose to do your business in the right location. If you go out and build your business at 20, 30, 40 cities, it doesn't make sense. I don't really get excited by what newspapers say. I read balance sheets of companies, and I see that these companies, in fact, to name Uber, they're doing pretty well in markets which make sense. So Uber operates in thousands of cities, but 6-7 cities, which is Chicago, New York, SF Bay Area, LA metropolitan area, San Jose, Sao Paulo, London. These are all profitable cities. Uber is making tons of money there. And between these cities, probably 7 cities put together, Uber operates 34% of the global revenue of Uber comes from these 6-7 cities. And they are the largest markets for them. But there are some markets where they don't make money. If I apply the logic for BluSmart in India, I probably figured out at early stage that applying Pareto's principle, that Delhi NCR, Bangalore and Mumbai, the triangle, Chhatrapati Shivaji Airport, Kempegowda International Airport and Indira Gandhi International Airport account for nearly 70% of India's aviation market, or 65%. 65% of India's mobility market in these 3 cities. If I had Hyderabad, Chennai and Calcutta, 86% of India's mobility and transportation market or ride-hailing market is these 6 cities. So you can make money here, a lot of money. But if I launch in 20 other cities where I'll be competing with a 3-wheeler or with a 2-wheeler, that's when the burn happens. The whole idea was, figure out the right business model. Figure out the right cities. Where do you want to launch? Where can you make money? Using EVs is an upside because you can make money in Delhi, you can make money in Bombay, you can make money in Bangalore. But using EVs is an upside because now the model comes in. And with the BluSmart business model of owning the assets, we have better control. See, how aviation market works is the planes which are manufactured by Boeing and Airbus are operated by these aviation companies, Indigo and Vistara, for 25 years or 20 years. Where you have to maintain the engine, you have to keep the plane in check, you have to keep the fuselage in check. Because the fact that planes are parked at the airport, the wear and tear is minimized and they are checked. So we keep calling the cars back to the hub where the driver comes in. They pick up a car from a fully charged, fully loaded car from the BluSmart charging hub. They do all the trips, assigned trips during the day. They drop the car back at the hub. So the car in the morning, in the evening is in mint condition. If there's any wear and tear or any minor injury to the car, we keep the problem small. We don't allow a problem to become big. In life, if the problem is there, address it. You don't allow the problems to spiral or become bigger. That allows us to keep the car in ship shape. The car can perform longer hours. It can serve more customers. Consumers are really happy. So we believe that this asset ownership model is the way forward for electrification of fleets to happen. And now comes the charging infra part. At the scale of BluSmart, we're doing millions of kilometers, millions of trips. We can't depend on third-party approach for charging. We can't allow the driver to go figure out where the charging infra is. If your state of charge SOC of the car runs out, you can't go figure out where the next charging station is, right? And you can't aggregate all the charging infra. No charging infra operator I know is sharing the data and creating an Uber of charging.
And you cannot expect the driver to find that
And
out either.
I'm sure he'll be able to find in 10, 20 years from now when there'll be thousands of charging stations, but not today. It's not happening today. So we thought our hub approach, or supercharging hub we call it, EV supercharging hubs, that's the right way for the car to come back to the hub, get cleaned up, driver changes the duty, the car is again in right shape and condition, fitness certificate is given to the car goes back again, the car is fully charged, and we optimize the entire cycle. If a car runs out of charge, the driver can go plug it in the charging station, take a fully charged car, off he goes. So we optimize just the way how airlines optimize along with parking spots at the airport. Airport is not only a place for embarkation and disembarkation. It's also where the technical snags are checked, airlines are refueled for longer flight hours, pilots are changed.
But the airline model is also a loss-making model. You do know that
Well,
globally,
for some
right?
people and for some people, yes. I mean, depends on what kind of airline are you building. It also depends on that, who your competition is. Are you secured by way of financing costs? Do you have the right fuel costs?
No, of course. That was just on a lighter note. I mean, you of course can't compare the two industries.
No, we
They're
learned
very
a lot
different.
from them. We learned a lot from them. I'm not an aviation expert, but I've been learning the way they operate, right? So I try a lot. I probably take 5 or 6 flights a week. I fly a lot. So I do know how they operate, and I met some of the industry leaders who operate those planes, not to name them, but a lot of learnings from the aviation market and fuel cost. You need to control the fuel cost. Why you make money is because you have the right input cost. Why you don't make money? Because you don't have the right input cost. If you have not figured out your input cost, you're going to lose money.
Absolutely.
So you have
and
to figure out your
ATF
input
prices,
cost.
as we know, are 40% of their EBITDA for
Correct.
aviation
So you have to figure out, and people make money by selling food too. You would know which airline makes a lot of money by selling food. I mean, they just declared the results. But yeah, so you need to figure out how to make money, and you figure it out, then you will eventually make money.
Okay. Finally, before we let you go, as you said, so yourself, you're a serial entrepreneur. So what next?
Well, to scale BluSmart, the focus is very clear on a singular mission to build it across India and also overseas. We are also launching in Dubai and Abu Dhabi now. The launch is in November and December, and then we'll be scaling across the MENA region, opening other markets. But the focus is right now to build across Delhi, NCR, Bangalore, launch in Mumbai, go big in the MENA region, starting with Dubai and Abu Dhabi. But I think it's going to take a lot of time for us. We haven't scratched the surface as yet. Market's massive. We are still learning. We are very, very early in what we are doing right now. A lot of innovation needs to be done. A lot of technology will change. So keep learning, keep adapting. But I think the next 10, 15 years, we are super laser focused on what we are trying to build.
So if you had to go back and change something about your entrepreneurial journey, what would it be?
Well, yeah, I would definitely like to go back and rewrite, but I think it doesn't make sense now to go back. But the learning has been that good to have a co-founder, good to then you can build a solid company and you can share. Being a solo founder, I think, is pretty challenging. You can make mistakes or do wonders also. And there have been some amazing entrepreneurs who have done so well, but God knows what the challenges were and how they dealt with it. But I think my key learning has been if I had to go back and rewrite and restart everything, should have been with a co-founder, because I'm sure I have many flaws which I don't know how to fill the buckets or fill the checklist.
Gaps, yeah.
And now with my co-founder, it gets balanced out. What I'm good at, I'm not good at. A co-founder brings a lot of experience and support, guidance.
Okay, that's great. And finally, since you are in this renewable energy space, in this sustainability space, I wanted to ask you, what's the next big theme from a country perspective, overall? Where do you see a large part of the funding going into over the next 10 years?
Infrastructure. So infrastructure is where India will see, I think, nearly $2 or $3 trillion will come to India to build infrastructure. Where new airports, charging stations, manufacturing of cars, India is now picking up. That number may change. India may leapfrog to be 60 cars per 1,000 people and all that with the way people are buying cars. The car sales market is also picking up. So I really believe that the next big opportunity is in renewable energy, building more renewable energy assets. Big opportunities in building charging infra. As India now electrifies itself and more EVs are coming on the road, huge opportunity to build charging stations, charging hubs. That's what we are on to now. Our next big focus is to build out massive charging hubs, not for ourselves, also for third parties. So what I didn't share with you is that these charging hubs today that we are building is not only for BluSmart. BluSmart brings the demand with a capital D from day one. So we are the anchor tenant to the charging hub. From day one, we underwrite the demand. But the charging hub is built and designed for third parties. It can also, it's like a shopping mall, right?
Yeah.
So 2 or 3 large stores at the front of the mall underwrite the entire cost of setting that mall up or that area. But then other stores bring in the cash.
Yeah.
So the charging hubs that we are building right now are to cater BluSmart's demand. And when the cars are on the road doing business, the hubs are empty for others to come. Like picking prime locations, like we are opposite Umrao in Delhi or next to the airport. Next to the Delhi airport,
So anyone with an EV can come and charge.
Right next to the Delhi airport, within a periphery of 3 kilometers or 4 kilometers, or maximum 5 kilometers, we have nearly 250,000 square feet of EV charging hubs. That's such prime location. And in shopping malls, like one of the prime shopping malls I mentioned in Delhi, there we have nearly 160,000 square feet. That's one of the malls. Now we're building in 5-7 such malls. So that is where people, when they come to shop, their cars are charging. Like here in Geo Mall, here in BKC, imagine a massive charging infra facility coming up there. So when people shop, they can also charge their cars. So finding key locations, converting them, it's great for the developer, because the developer or the mall owner can also enjoy extra revenue coming in. You can monetize that asset, which is anyways a light, empty asset, to allow cars to charge, and by bringing additional energy connection. So we fundamentally believe that that's a huge opportunity. That's the next big opportunity, is to set up charging infra.
Okay, well, this was a very, very interesting conversation, Punit. Thank you so much for joining us on the show, and all the best with all the fundraising that you're doing. Hope you double your capacity, as you've been, talking about. That's your guidance, right? To go from 5,000 EVs to 10,000 over the next 1 year.
We should be at nearly 9,500 cars by March. Hopefully everything goes well. We have money in the bank to go up to 30,000 cars for December next year. So that's the goal, to scale to 30,000 cars across 3 cities in India and overseas by December of 2024. But our short-term, mid-term plan is by March of 2024 to be nearly 9,500 cars.
And you didn't answer about your listing plans.
Yeah, so absolutely, it's on the card. So capital, you need to decide where it should come from, at what cost. The capital should be sustainable. As we're building a sustainable mobility company, we also want sustainable capital to come in. And till such time, we'll be able to raise sustainable capital from institutions. We'll keep raising. Well, listing is obviously a great validation of a good company. We're also getting a lot of consumer love from a lot of retail customers who use BluSmart. So they love BluSmart. And my LinkedIn inbox is full of messages saying that, how can we invest in your company? How can we invest? And I say that, but these investors should be given an opportunity, although they can't write checks of millions of dollars, but they all want to be a part of the BluSmart growth story.
So the best way to do it is to list on the exchanges.
Exactly. Then they all can participate. All these millions of customers who today are enjoying the BluSmart service, they will all be a part of the growth story of BluSmart by investing during our listing.
All right. It's great to watch your journey, and congratulations once again, and all the best.
Thank you so much, sir. Thank you.
Thank you for watching CNBC TV18. For all the latest news and updates, do follow us on our social media platforms.